So Intel had a great week. The stock was up 25% for the week, as it did find some support at $19. One can say this is a triple bottom. Got one, two, and then three. Or one can say that this is a macro double bottom. This is the monthly chart. One touch, two touch. Regardless, on the daily chart, price is now contending with not only a support resistance band, but the 200-day key day moving average. Now, why was the stock up this week 25%? Well, investors are hoping that Intel and Taiwan Semiconductor spark a joint venture. So those are the fundamentals. However, macro picture shows that Intel was one of the worst performing stocks on the equity markets as price sank down 62% to the lows in about a year's time. All right, let's get into the news and then we'll get into some more of the technicals. So shares of Intel were on the move this week on a number of different news items as investors seem to spy opportunity in the beaten down legacy chipmaker. While the company has mostly played the role of the aging laggard in the AI boom, this week's developments were a reminder that the stock has a number of assets that are arguably undervalued. Intel is in the middle of a years-long pivot of opening its foundry business up to new customers. After forcing CEO Pat Gelsinger out in December, there have been questions about whether Intel would sell the foundry business outright and just seek to be a chip designer. That logic ties into the two primary factors lifting Intel stock this week. First, rumors started circulating that TSMC, the world's largest chip foundry, could form some type of joint venture with Intel to help it manufacture advanced chips in the US. These rumors don't seem to have come from either company and instead involved in the media based on the federal government's desire to make the US a hub of chip manufacturing. Also, the stock got a jolt after Vice President JD Vance said that the Trump administration would ensure that the most powerful AI systems are built in the US with American designed and manufactured chips. However, Intel is still losing billions of dollars a year, but the company is the biggest US chip manufacturer, giving it a possible advantage at a time when the federal government wants to bring chip production home. At this point, this week's gains seem to be mostly based on conjecture, but it does show the potential for the foundry business to drive a recovery in the stock. Still, that alone isn't reason to buy. Now again, best levels to have gotten long was at this support, right? It was support as well back in August of 2024. Now the stock has lifted and is at a critical juncture. Again, what was support is now resistance. So what's the play here? If you believe that Intel is going to recover, here's the move that you want to see. Make $30 your target round hole psychological number, which is just above that gap fill. You want to see price breach and close above this resistance support band, pull back, and then move higher. That's the play. Let me know what you think. Does price rebound or does price pull back? Thanks for watching. Subscribe. Please like the video.